It's March 12, 2014, current time 11:05 GMT. Jay Misley here from globalview.com with the daily Forex outlook. Markets are in a risk-adverse mode. It's hard to tell whether it's concerns over China slowdown, as witnessed by the Aussie dropping, or it's the Russian situation with Crimea and Ukraine. But whatever it is, the markets seem to have a risk-off feel to it. You can see by the way the yen's recovered a little bit, but market really is in an uncertain state. The euro right now. It's up about 90 pips from the 2014 close, although it looks like it's in lofty levels. Really, the year-to-date movement has been modest, although when put in the comparison that most expectations coming to the year were for a weaker euro, it continues to be resilient. A word about Crimea. I heard a short while ago that the Crimean government, or there's a government, said that if the vote is for independence, they will initially declare independence. Secession from secession from Ukraine. They'll initially declare independence and not be annexed into Russia. But that's a moot point, because if they do vote for secession, essentially they're going to be part of Russia. And so we got that March 16th vote in Crimea, and that should keep a risk-off feel into the weekend, at least to protect against something happening there and a reaction on Monday. The euro continues to flounder between 138 and 139. That makes 138.50 the pivotal level, and the bias setter, while within 138 to 139. A level that's on the top has been 138.75 to really 80, and then 139, protecting last week's 139.15 high. As I mentioned yesterday, 138.25 was the former breakout level, and from last Friday or last Thursday after the ECB meeting, and that's pivotal support and downside. Yesterday's low came close but didn't touch it, thus the bounce. You got 20-day moving average and the trend line both below 138, so that supports the trend. But if you look at the daily chart, today's gone so far an inside day, and we're just basically consolidating, and it's hard to see big bets being made in this pair today. There's no news out to speak of. A highlight overnight is going to be the Reserve Bank of New Zealand's rate decision. The surprise would be whether they don't raise rates, so that's otherwise a rate hike is probably priced in already. And you can see the way Aussie New Zealand has been trading. That's been the real flow there. So that's your daily. On your weekly, once again around 138.25. This one shows 20, but it's really 138.25 on the downside, 139.15 on the upside. Really anything in between is just noise within 138, 139. 1 hour, similarly, we are back above the 100 and 200 period hour moving averages. This level here is 138.76, yesterday's high. So it's been 136.70, about the 75.80 has been holding it. So that's ready for today. No news out. You got to watch stocks. You got to watch flows. Dollar's not really getting the safe haven flows, maybe because the U.S. is more exposed to doing something against Russia. Whatever the case. And one indicator you can watch is Euro Swiss. I've been keeping an eye on that, as that is an indicator to me of risk aversion and concerns over Russia. If we stay below 122, that would be a risk-off indicator, although you have the Swiss National Bank on the other side, so any test with a 120 handle, we'll probably see a response from the Swiss National Bank, if only covertly. That's it for today. Once again, euro dollar, watch 138.50, and dollar yen maybe 102.50, I guess, would be the level. Commodity currency is a little weaker. Sterling continues to slip, possibly because of some positioning, and there was a chatter of a Vodafone takeover of a Spanish company yesterday, although they maybe, but that's still down the road. And that's it for now. So just, if euro dollar seems to be in a range, but unless taking out 138.25, 138 stays protected, and above 138.75, we'll put 139 in play again. High for the week so far, 138.98, and that is so far untouched, and it was on Monday. So stay tuned. If you see at the bottom of this page here, you'll see a link. It's embedded. You can click on it, and it'll take you to what we consider a wealth of information with many free benefits. So try to click on it. It's worth your look.